Great. So, Bogdan, let's talk about what's going on in the crypto world. I guess we could certainly talk about Bitcoin, because Bitcoin is now at $68,800. It's down 1.4% I'm talking to you now, and it's down 28% for the month. Year to year, year to year is down 30%. What do you think is going on here?
Yeah, yes. Thank you, Patrick, for asking, and thank you for having me on your podcast. Yes, right now it's pretty difficult time for crypto. But I want to say a few things before that, because I'm from algorithmic trading and investment field, and I'm for now 14 years involved in this type of business. So first of all, what I want to say is that this is actually a zero-sum game. Yes, so this is just a way how crypto assets will be redistributed. Yes, so somebody wins, somebody lose. And if we are speaking about classical markets, let's say Forex, US stocks, and other, it's connected with fundamental stuff, with economics. So it's connected with something solid. In crypto, it's okay. For the last 2 3 years, there are more institutional coming to the crypto space, and there are a lot of hedge funds investing in crypto. But still, it's a less regulated field in comparison with other markets. So that's why there are a lot of space of manipulation and different types of so market maker trying to make some money, and some big players are trying to make some money from the retail investors, let's say. And typically, what I see right now that a lot of small investors are losing money, and it was in crypto. It's very common for crypto. So big hedge funds and big players are capitalizing on it, and small retail investors, they are losing. So, and typically for a small retail investors, it's very difficult to sit still in a drawdowns. So probably this is one of the reasons that this is big whales manipulation, and this is let's say some big wave that ended recently in November 2025. And to be honest with you, in my team and in Alpha AML, the project right now I'm building, we are thinking that this is the beginning of the downtrend. So this is just a beginning. This is from our point of view. Patrick, you're muted.
Sorry. So it's the beginning of the downtrend because driven by the big players, or was it something more fundamental to it? Because one question that always comes out is, when is Bitcoin to become a store of value, or perhaps a critical piece of the AI self-funding story? Is that a thing for Bitcoin? Or is it purely a trading mechanism? And
So to be honest with you, I think the main feature and function of the crypto is for sure it's some sort of diversification. And we can see that a lot of big companies and institutions, they have some small portion of their assets in crypto just for diversify and to capture some big movements. So this is first. We don't see really strong connections with AI industry. I think even technological sector of US stocks significantly more connected to AI bubble that we are in right now. I don't see that crypto is really connected to the AI agents or to the AI companies. Um, I will tell you one interesting case. So for sure, US stocks, Forex, and other classical markets, they're pretty very efficient. But for example, in crypto, last year, we can spectate a lot of inefficiencies. It's crazy inefficiencies. Like you can just buy one asset and sell same asset on another exchange from maybe in another blockchain, yes, but sometimes inefficiencies are huge. And particularly when we are speaking about new blockchains, They are not very popular, and people thinking they're a bit risky. And for example, arbitrage algorithms not connected to such new blockchains. So that's why arbitrage opportunities can be huge. Only on myself, I saw something like arbitrage opportunities that you can capture $70,000 in just 10 minutes. Just with simple arbitrage bot, you can make this money. But it's not every day for sure, and it's very rare situation. But still, it's very interesting. So what I want to say is that it looks like crypto still in 2026, it's still not very efficient. And it not looks for me that AI businesses and technological businesses really connected with the crypto prices, with capitalization of this market. It's more looks like diversification tool. It more looks like some manipulation tool. For sure, there are a lot of interesting and big projects. So people thinking that crypto it's new financial model, it's decentralized finance. For sure, it can be, but this is getting bigger and bigger. It's still not very big as U.S. stocks exchange for U.S. stock market, for example. So this is my vision.
So basically, you still see it. It's in its infancy as a as an investment. It hasn't been institutionalized, I guess, from your point of view.
You see, from AML field, what I can say is that it was a big wave in 2022.
Hmm.
A lot of decentralized projects are tried to so regulators trying to add additional compliance restrictions to even to decentralized projects. But it was in 2022. Then it was a new wave in 2023 and 2024. Centralized the changes, some some platforms and other became more compliant and more regulated. We can see Nika in Europe. We can see in the United Arab Emirates. Such regulators are trying to make proper compliance in such regions. But the centralized world are still not pretty compliant. So what it means? It means that institutions, it's pretty difficult for institutionals to dive into this. So I think right now in 2026 we are in a interesting time when it will be more and more regulations, it will be more and more compliance, and crypto world will be more connected to the real world. And I think this is necessary. Some algorithmic traders, some crypto enthusiasts, they a bit sorry about this, and they worried about these regulations because they believe that crypto should be anonymous and should be free and open to everyone. But actually, I think it should be regulated. It should be structured and with proper compliance. Only this way. The trading and financial platforms can be really transparent and can be really connected to the real world. So I think we are in the way of this.
But even though the U.S. has been doing a lot in terms of regulation, the new administration, right, rather as opposed to
Yes.
the other one, so they are really. But you think there's more to be done there in terms of regulation and compliance and all that?
Yes, I will tell you one interesting case that happened 1 month ago. Probably you heard about it, or your audience that listening right now heard about this event. It was a pretty big and interesting hack of Trust Wallet. It's one of the major cryptocurrency wallets, and you can use it on your mobile phone in your browser extension. And it was actually was particular hack for the and victims were users of Chrome plugin that were installed. But you see, what was very interesting in this hack is that users that used one of the most popular wallet. that is considered very secured. And they received update on a Christmas, and they decided, okay, it's something important. We need to update to the newest version, and their funds were stolen immediately. So once they unlocked the wallet, all funds were gone. So how this happened? This happened because of actually it's very interesting story because this attack was turned against developers. And in September and October 2025, a lot of developers were infected with Shai Hulud worm. It was one very interesting incident when NPM packages in JavaScript packages ecosystem were infected with this worm. And a lot of big CTOs, a lot of big companies were affected, and CTOs and major senior developers were infected by this worm. And what is interesting is that a lot of secrets and a lot of credentials were leaked to the attacker. And one of these victims was developer of Trust Wallet, and his credential were leaked to the attacker. Then this attacker used this credential to deploy on his behalf new version of the Trust Wallet, and the Google security team, because it was Christmas, ignored this incident, and hacker immediately stole a lot of funds. So it was huge. It was huge attack, and it was
Mm.
very bad for the crypto industry because you see a very trusted wallet, trusted update. Google accepted this update, and a lot of funds were stolen. Trust Wallet actually compensated all the stolen funds because it was their fault. But what is interesting, why I telling about this and how it's this connected to the US government and to the regulators? Because you see, actually, these funds were very quickly laundered through the different projects, from the different platforms, from the different bridges. Even centralized exchanges were also involved in this. And right now, there is no clear regulation and clear compliance when you can um, allow specific companies, allow specific bridges. Even centralized exchanges sometimes can receive funds of user without KYC procedure, and it actually a big threat because you the reason so you if you, for example, your funds will be stolen. In this case, you don't have guarantee that um, the hacker will be catched in the future and this funds will be returned back to you. So I believe that US government right now realized this, and in January 2026, 1 month ago, actually they trying to add more and more regulations to the decentralized projects as well. I believe maybe such case like trust case with Trust Wallet shocked a lot of people, and that's why regulators thinking how to avoid this, how to make laundering more and more difficult, how to protect users, and how to bring additional confidence to this industry. So I believe this.
Okay, so all right, so you basically there's not enough. So we're not. It's not a stock market basically. So there's opportunities obviously. Now, what about the cost of mining, which I believe the break-even cost right now of mining the Bitcoin? I don't know. I've seen $59,000 per Bitcoin, as low as 50, depending if you're efficient. What is your view in terms of, the break-even cost and the ultimate price?
Yeah, this is a good question, and this is very important. To be honest with you, I'm not a mining expert, so I don't tell you about everything in detail.
Hmm.
But mining is really important stuff to be considered when you calculating the fair price of Bitcoin and everything else. I will tell you, I have some vision about it, and I will tell you more about Bitcoin waves, why they happened, and why we have right now downtrend in from my point of view. So for sure,
Hmm.
it's not investment advice. It's just my vision and our analysis on this situation. So please do research on your own.
This is
But
purely educational purposes. Yeah. Yes.
yeah, exactly. So, but I will just use some heuristic here and some. I will tell about some numbers, some statistics that we analyzed. So first of all, there is one interesting indicator that can be found in on TradingView. It's called hash ribbons. So this indicator connected to the external data source. So it's not only connected to the chart on TradingView. It's connected to the external data source with mining hash rates. This actually indicator demonstrating the trends in how this hash rates going up and going down. And this is actually a pretty powerful indicator and can highlight some up and down trends. So I definitely recommend to just explore it.
Hmm.
Actually on Bitcoin, you can spectate there are typically waves. They are prolonged for 4 years in average. So when we made analysis in November previous year, we analyzed four waves. One wave started on 2011, another wave started on 2015, a third wave started on 2018, and the current wave started on 2022. So all these four waves, they were duration of them were from 700 days to maximum 1070 days. So it gives you some statistical understanding that duration of this wave around 800 900 days. Why this happens? Why the lengths of the waves are very similar? In this question, we can return back to the zero-sum game, and that typically crypto market is a tool that big players and big manipulators can, let's say, withdraw some money from the retail investors. And for years horizon, it's very difficult for the retail investor. So imagine that, let's say, some students or maybe some employees that receiving pretty small salaries and for example other professionals but not rich people they just invest in crypto for fun, or maybe they believe in something, but they are not very deep in financial analysis or not very deep in investments, and they are not very rich. So let's say draw down 1 2 years. Sometimes it's possible to survive for them, but 4 years it's impossible. And even from psychological point of view, if you see that during 4 years, okay, during 2 3 years, your funds are going down, and it's going continuously, your brain adapting to this, and people want to sell this crypto assets, even they getting smaller and smaller. So it's just from psychological point of view.
Hmm.
And so I believe actually is that current waves, they are not very connected to the mining. I believe that this is just some sort of manipulation from the big players, and they design these waves to. Okay, it's they explaining everything with mining, that mining is connected, and it's the Bitcoin will never go down and will never price very cheap. It will not very cheap, but they demonstrated during very long period of time, 15 years or something like that. They demonstrated that okay, Bitcoin is continuously going up. It was not listed on. It was not any exchanges, and it's still going up. When MTGOX created, BTCE was created, everyone can see some centralized exchanges that price still going up. Then Binance was created. It getting more serious, and people always hearing about the waves about Bitcoin going up and Bitcoin going down. So we made analysis and we calculated the typical statistics of these waves, and it looks like the wave typically 800, 900 days. And we calculated that it was actually on October, November when we calculated, and we expected that it was the peak of the previous wave. And if you will analyze previous waves, how it looks like after the peak, so Bitcoin typically going down 70, 75%. So you can do this analysis on your own. You can just calculate this from the peak. But amplitude is going smaller because, as we discussed, more institutional go to the market, more liquidity is going, and it's more difficult to manipulate with the price. It's more difficult to attract new investors that will pump this price so actively. So that's why amplitude is going down. And if you will analyze the pumps of the Bitcoin during these four waves, they're getting smaller, smaller, and smaller in case of percentage. And the same drawdowns after the peak of this wave, the drawdowns also getting smaller. First drawdowns were, as I remember, around 80%. And then they getting smaller and smaller, 75, 70%. So that's why we're expecting that on this downtrend, drawdown will be around 65, 70%, and it will be around $35,000, $40,000. So we're expecting that Bitcoin will go down to these levels. Right now, to be honest, Bitcoin is pretty it's oversold. So it's $67,000 right now on Bitstamp, and same on Binance. So it looks like that maybe some correction will be, maybe some Bitcoin will go higher, and then this downtrend will continue. But still, in a long term, under long term, I mean 1 2 years, something like that. In long term, we're expecting that price of Bitcoin will go down. Regarding the waves, what I want also to say, and this is very important, that this group of market makers and this market manipulators, they pumping different markets and different type of tokens. For example, sometimes it's alt season. Alt seasons, that means that small tokens like altcoins, they are going up. Sometimes it's meme coins season. Sometimes they investing in some random projects, and such projects are going up. And I have a connection with several teams that doing on-chain analysis, and we also doing on-chain analysis. And what we sometimes we're exchanging with some experience and with our findings. So it looks like that sometimes these big participants, big players, they uh, they randomly choosing some aspects where they will invest, how they will do money laundering, how they will pump the market, and actually this additionally boosting Bitcoin. So they using Bitcoin as a way of withdrawal their profits. So they using pretty long way how they converting their assets from one token to another token using different exchanges during these different bridges. So these assets goes from one big blockchain to another blockchain, and in the end, they accumulate a big amount of Bitcoin, Ethereum, and such tokens are have very big market capitalization and very big market capacity, and that's why they can sell this big amount of Bitcoins and Ethereum to other participants. They can sell millions, sometimes billions of their assets, and withdraw these funds officially, completely white assets to the exchanges, and then make proper withdrawal or exchange on fiat or in other world assets. So actually, this waves that can lasts for 4 years, they actually very convenient for these big players because on the beginning they accumulating, they boosting specific projects, they selecting random area where they will invest. This area always different and it's very difficult to predict. Sometimes it's NFT, meme coins, altcoins, and other. And then they moving these funds to Bitcoin, Ethereum, and then withdrawing funds from the Bitcoin, Ethereum, because a lot of people still buying Bitcoin and Ethereum on the top, and they're selling, and receiving some stable coins that they can convert to the fiat and other assets. So this is our vision. This we can see via on-chain analysis and we are exchanging some experience with other teams.
So basically, you're making four important points. The first one is there's this concept of this wave that we need to understand. The second one is there is manipulation going on. The third thing is compliance could be better. And fourth, this could be getting better first, but worse in the future. So this is not for the faint-hearted. I mean, you have to really, right? This is not a stock market analysis where you understand the financials, you know the company. This is very, very. I wouldn't call it. It's a complicated. I mean, for you guys, it's probably not easier, but I mean, since you algo trading, that's why I couldn't understand why you need to use AI to really capture every single ounce of juice in this thing. But the real retail investor really doesn't have too much of a chance now. I mean, he's been used to it going up and up and up, and now he said, "Well, this can't be happening, right? This Jordan cannot be happening. It's going to go back up, right? Because it's been going up forever." Interesting.
You're absolutely right. You mentioned absolutely correct points. And from my point of view, what I can recommend, and it's definitely will be important for everyone who wants to think about crypto. I think what it should be done by such investors, they should try it on-chain analysis. They can try it on their own, or maybe they can try it with specific platforms and specific tools.
Hmm.
So, for example, Arkham Intelligence, Nansen, Dune Analytics, or just exploring some Etherscan, Arbiscan, and other scanners where you can see exactly transactions. So, what interesting I can tell about this is that if you're doing deep on-chain analysis, you can see how funds are moving from one wallet to another wallet. And some hedge funds like BlackRock and other crypto holders, they exactly telling, here is my wallet, here is my portfolio, and you can even track them. So you can see on chain what's going on. Is it true that they are telling to everyone? So you can even see all these transactions and how many tokens on their wallets. And with on-chain analysis, you can be first who will see that this funds somewhere moving. You don't need to wait articles on Bloomberg or on BBC or other media. So you can see it using your tools. And for example, when we analyzed meme coins before, we captured some patterns and some market makers that did some market manipulations, and we saw how they generating profits, how they pumping the tokens, what is the accounting for these tokens, how much profit they're expecting, how much retail investors uh, bought tokens, and how many profits they can achieve by dumping tokens, and so on. So it's actually it's crazy. This is one important point, to do on-chain analysis and to see what's going on in blockchain. Another interesting point is that actually this industry getting more harder and harder because let's say let's say you're a trader and you using your MetaMask or another crypto wallet to make some crypto trades. You bought some Bitcoin and holding it. So your behavior of this wallet will be pretty simple. Anyone can track what type of wallet you are using, probably what exchanges you're interacting, what blockchain you are using, how many fees you are paying, and so on. So there are some, let's say, fingerprints that anyone can track. And if you will use similar tools, your fingerprints will be the same. But what is interesting that this market manipulators, they're using more and more sophisticated tools to generate uh, fictional traders. They absolutely artificial, and but they looks like real. So if you will analyze only one wallet, it will looks like a real human. He is sleeping. He is have sometimes vacation. He using similar tools. He has some trading preferences, risk appetite, and so on. So by any analysis, you will see that this is human. But when you analyze many of them, you will see, let's when you analyze millions of them, you will see that they actually artificial. So they randomly generated. They have some very statistical, very odd behavior. And actually, what doing market makers? They creating millions, sometimes even billions of such fake wallets to demonstrate fake activity, like they're buying or selling, and they just doing market manipulation with this stuff. And why this is dangerous? Because using such powerful AI tools like we have right now, that can generate different patterns and different code for you, actually such manipulators using more and more such this artificial behavior tools to make it fake. And it's getting more and more harder to make proper on-chain analysis and understand who is a real trader, who is hedge fund, and who is manipulator that just drawing charts for you. So this is crazy. And we are in this type of analysis, and it's getting harder and harder. So yes, you're right. And I think right now on-chain analysis can be helpful, and additional understanding of this stuff can help investors and traders to avoid these mistakes.
Wow, this was most interesting because you're describing a very complex world. I want to thank you for your time as usual. I think this is helpful.
Thank you, Patrick.
Hopefully Dubai is not too hot today, right now, but
Oh, it's amazing weather right now in Dubai. Yeah,
it's
around
always
25.
wow. That's nice. Well, thank you again for your time. Appreciate it.
Thank you so much, Patrick.
Thank you.
Thank you. Speak later. Bye.